Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. So let's take a look at some charts as we approach the end of Q2 2020. Historically, Q2 has been the most bullish of all quarters for any cryptocurrency, including BTC and ETH. And this quarter was no different at 42%. Looks like we're gonna close somewhere in the 40s, probably even high 30s. In any case, it's a great quarter coming off 3 consecutive negative quarters. That looks great. Okay, now as we move into Q3, what do we expect based on historic quarterly closes? So we can see it's not as bearish as Q1. It's definitely more bearish than Q2 and more bearish than Q4. So all in all, not expecting too much out of Q3, just based on the historical closes. Q4 has been much better for BTC than Q3 or Q1. Again, we're building a story here. So I have a lot of charts today. That's usually a terrible sign. That's usually a sign that trend metrics are borked and it's a coin flip and we're all over the place. So lots of charts building the story. So far, Q3 bearish. Okay, let's look at ETH. ETH Q2 bullish, Q1 actually more bullish than Q3, Q4. So again, ETH Q3, not expecting much historically. Even these positive quarters have been next to nothing. And it's coming off a 72% positive quarter. So quarterly closes, not expecting too much out of BTC or ETH for Q3. And Q4 looks real bad for ETH. So, if ETH 2.0 doesn't come out in Q3 and doesn't come out in Q4, that would line up with these negative quarters historically. I don't know what negative 30 is from here. That's probably something I should calculate as well, just as far as the expected down price from the Q2 close. Looking at some Bitcoin on-chain stuff, MVRV, market cap minus realized cap, divided by the standard deviation of the market cap here. Historically, these have been the buy zones, these have been the sell zones. You can see we are nearer to the buy zone than the sell zone. And typically when we're in the buy zone, we spend a few months there, as wasn't the case here. So overall, this is leaning bullish, but doesn't scream buy. Obviously, upside is immense. But if we're building a story, this is lukewarm. If we're building a story based on the Puell Multiple, it looks better in that it's more in the buy zone than MVRV was. Puell Multiple is based on coin issuance, which is going to go down after halving. So no surprise here that we're back in buy zone territory. So much more bullish than MVRV does. Looks much more bullish. Looking at the MA multipliers, this is just the 2-year MA and then 5 times the 2-year MA. Again, kind of lukewarm like the MVRV. It's in between the high and the low. It's not, above or below anything. The low here is 7,200, or the 2-year MA 7,200. Definitely a level that I'll mention again in this video. And you can see all these buy zones were pretty great so far as signals. So that's also lukewarm as we build our story. Logarithmic growth curves historically have been great. Recently, not so much. You can see we're at the very edge of this, at the very bottom. So if we break down again, I wouldn't consider this useful at that point. Rip logarithmic growth curves, because if we break down again, then to me it's pretty much over. Not like over to zero, but just as a signal for this, it's over until we re-enter, and then the expectation is median line again. But for now, it doesn't look so hot. Now, if we look at macro technicals for BTC and ETH USD, and I look at the cloud, the favorite indicator amongst all of the profitable traders who've ever existed, it's telling me some mixed stuff. Again, lukewarm short trend is over, not quite bullish yet. Sort of will she or won't she, in between, not really great signals. So looking at the BTC side, Kijun is the mean reversion point. So you can see we've snaked in and out of this over the past 8 months, right? Over and over again. We're basically back at it again. The issue here with further upside is that the TK cross doesn't match with the confluence of bullishness. So the TK cross is still bearish here. Now, if we get a bearish breakout, I'd expect 7,200 again. There's that magic number. 7,200, 7,250, whatever, 7,100, 7,300, whatever that is, that range, I think is where we go if we do break lows, which at this point looks better than higher highs. You could argue some sort of inverted Adam Eve here on lower time frames, M double top, whatever, I don't know. Whatever this level is, the Kijun, also support. So there's plenty of evidence here that if we break down, it's 7250. I'd also watch 8500, this flat Kumo here. If we break up, if I'm wrong, I'm definitely leaning bearish right now, but if I'm wrong, it's 11.5, 11.6 based on some edge-to-edge nonsense. You know, the worst case for a trend trader like me is that we break below the cloud here, get our short entry, and then we break back into the cloud and then blast this 11.6. You know, of course that's possible, but not something I want to see. Now, going into 2021, this looks great because we'll get our bullish Kumo breakout on the weekly. Cloud will flip bullish as long as we don't break lower lows around 5K. Even if we break 7.2 or near it, this will eventually flip bullish if we hold 7.2. So into 2021, love it. I think that matches all post-halving metrics for uptrend. I don't know, pick your poison as far as what you're looking at there, but I don't expect halving effect to necessarily kick in until many months from now. Looking at ETHUSD Cloud, it's just the garden variety edge to edge to 750, 800, 850, somewhere in there. Sounds insane, always does when you say that out loud, but I'm just looking at what the system is telling me here. So a few levels to consider are, again, the Tenkin here. There isn't confluence with the edge to edge. One of the factors to make sure that this long trade is good is to watch this TK cross. If this crosses bullish with price in the cloud, then it's go time. I think it's got a few weeks to confirm if that happens, because right now, again, it's just sideways, right? Tenkin's flat, Kijun's flat. It's momentumless. There's nothing going on here. It's just range city. 190 is a good level. 210 is a good level as far as supports on the way down, should this drip or droop in any fashion. But as we stand right now, this looks good for the potential for upside, more so than BTC does. I think this would need to make higher highs to convince me, whereas this actually looks okay. Now, if this TK line starts to go bullish, which it'll slowly happen over the next couple of weeks, then the edge to edge looks more convincing like it does here. So cloud as a whole on the macro level for BTC and ETH, definitely not immediate long or short signal there, but also plenty of triggers to watch for. Looking at the BTC daily cloud, the first thing that immediately I see is this potential for this edge to edge in the opposite direction to the short side, especially with this flat Kijun, previously, currently flat Kumo. It just looks super ripe. Again, 7,200, bingo, bango. Somehow, all these numbers are the same. Lots of confluence for 7,200. There's VPVR support here. Of course, I'm ignoring this massive VPVR support here. I'm ignoring the yearly pivot. So there's definitely things to watch for. If you're short, going into here, things I'll be watching for. You know, if you're short on this entry into the cloud, then you're watching for how we react at 8K at 7,900 based on volume, based on the yearly pivot. If this starts to look reversally, then there's plenty of reasons to close here. But the expectation is always we'll get at least a wick to 72. That's the expectation. The flip side, what am I watching for if I'm bullish, if I think we're going to break 10K, is I want this to cross bearish and then I want it to recross bullish. I want this cloud to actually pull up a little bit, because right now the R&R on this short trade is just immense. Your stop is at 10K, your target is 72. It just looks really good for the short side as far as the cloud is concerned, especially if we get this bearish TK cross. So all this together is telling me watch for a massive drawdown here if you're long. But if we continue to go sideways into doldrum nothingness, I'd watch for that bullish TK recross above the cloud near 10K. Then I'd expect some bullish momentum. But right now it just looks like it's ready to droop down to 72. And again, looking at this macro mess of a potential inverted head and shoulders pointing to 6.4, 7.2, plenty of VPVR if we zoom way out here to include 2017, 2018, plenty of level there as far as support from 6.4. So I don't expect this to break 6.4 if we break down to 7.2. Either a wick to 7.2 or a wick from 7.2 to 6.4 and then a bounce to 7.2, something like that if we break down. But I'd watch 8K, I'd watch 7.2, I'd watch 6.4. Those are the levels I'd be watching if we break down here. And then going into 2021, again, if this macro inverted head and shoulders plays out like it could, now it's a sloppy hot mess, but it could play out. We're looking at 14 to 16 going into 2021 Q4 this year. I doubt Q1 just because Q1 anything has always been horrible, but we may see this Q4 blow off again to match that target. So if we're continuing to build our picture for bullishness or bearishness, we can look at other trend metrics like EMAs. This is the 50 and the 200. We can look at crosses. We can say, wow, we've had a lot of crosses in the past 6 to 8 months and very few crosses previously, the previous year and a half. That tells me be careful paying attention to these because it's messy and noisy. This was late, this was late, this was late, this was late. These are all late crosses. So if we get a bear cross again, I'm less convinced that it just keeps going because historically, recently, all these have been late. I would more closely pay attention to how we react to this 200 level at 8.5. So you got plenty of reasons on the way down. You got 8.5, you got 8, you got 7.2, you got 6.4. Those are the levels I'd watch. Now, to see it drooping below the 50 here for the first time since late April is concerning as well for bullish continuation. Let's look at the 10 and the 50 EMA. Let's bring it down a little bit. We can see we've had not too many crosses in the past 3 years, but decently actionable crosses. You have to know when we're sideways and we're not trending, right? Like that's the key to using trend metrics. Everybody always talks about EMAs or MAs being late and they're pointless and they don't work. Okay, great. But when this stuff trends, it trends, right? And recently it's been kind of noisy, but it gets you in here at this inverted head and shoulders, it gets you out before the breakdown, it gets you in again before this. And oh, wouldn't you know, the 1050 is flipping bearish again or about to flip bearish in the next few days. Just more warning signs for the long side of this trade. Here's the alligator, which is the 5, 8, and 13. Let's zoom in on this microscope even further. Look at these EMAs. What do you know? They're all sideways, leaning short. If you know anything about fractals and the alligator system, it's telling you to get ready to short this as we close below 9.2 with favorable EMAs. So again, nothing here is telling me this is bullish. This is just what this looks like. This is sideways leaning down. It's not sideways leaning up like it is here, like it is here. This is definitely be careful in the near term. And oh, wouldn't you know, B-bands decently tight. They're below the 20 SMA and getting ready to push to the downside. Another reason to be careful on the long side of this trade here. Just building that story. So BTC wouldn't surprise me if we just break down here in the next week or two. Now, the wild card is Q2, Q3 rollover factor in that we could have had more shenanigans than we did with volatility. So maybe Monday is like the key decision making time frame for where we go from here for BTC. But right now, as we stand in this snapshot of a moment, it looks like we're more bearish than bullish, certainly. Now, looking at the ETH cloud, nothing too exciting here for me, honestly. There's not that edge-to-edge trade. We don't have a TK cross getting ready to flip bearish. You could argue for a key June bounce with a tight stop somewhere, but there's nothing that looks crazy to me here. It just looks like garden variety, yearly pivot at 200, yearly resistance at 300, VPVR, nothing spectacular for support or resistance. Certainly more support than resistance, but there's nothing here for me. That's what I'm trying to say. I just don't get a strong feeling one way or the other. It certainly leans bullish, and more so than BTC does. If you look at the 5200 crosses over the past 2 years plus, again, it's been quite noisy most of the time, other than this god short signal here, and this long, which is a bit late, decently signaled short here, pretty late long, late short, pretty decent long, so kind of a mess here. Again, I'd be watching the 200 more than the cross itself. So the 200 is at 200 appropriately enough. Definitely a level to watch. And if we look at the cloud again, at 200, 209, whatever this is, level here, definitely an area to be concerned with. Let's look at the 1050, just like we did with BTC. Again, decently signaled longs and shorts in 2018 and 2019, a little bit less so recently, but I don't know, the upside on this and the downside on these are pretty decent. And wouldn't you know, we're rotating bearish again within the next few days, most likely. If we look at the alligator, which is the 5 is actually the higher. This is 21.8, 18, whatever, doesn't matter. The point is these are flat and flipping bearish as well. And again, your short entry would be below 226. Your long stop loss is below 226. Your long entry would be above 250 with bullish EMAs, which are nowhere near where they need to be at this moment in time. So all of this looks leaning bearish more so than bullish. Again, just like BTC, B-bands are not really that tight, but price is leaning towards the downside here. One caution with the short side of this is the potential for some sort of cup and handle situation here. I don't really know. I don't know what this is, but the volume tends to lead me to some sort of pattern here. I don't know. This could easily go to 180, make this handle and then bounce from there and fulfill the cup and handle destiny. But it's just weird to see volume drop off like this and not have a distinct pattern, because usually there's something going on here. Even with this ascending triangle, we had a beautiful descending volume. So I don't know. In hindsight, it'll be obvious, but right now, it doesn't really look like a cup and handle. It doesn't really look like anything else. So 50% drop would be 180. If it breaks 250, it's going, folks. 350, 400, something like that. But all the EMAs are leaning bear currently. If we flip to ETH BTC on the 2-day chart, so this is the 100 and the 400 EMA on the daily, and for the first time in 2 years almost, it's getting ready to flip bullish. It's at this key support resist level. It's at this yearly pivot. So this is definitely something you want to be high alert on if you're trading, because this looks like it's leaning heavily bullish right now, especially as it gets ready to exit this triangle. I'd expect a move to yearly pivot VPVR resistance 035, something like that. That would be a decent long trade. This is the 2-day cloud, also bullish for the first time in 2 years, also getting this bullish TK recross above cloud. Even though we're sideways, it's definitely leaning bullish. So ETH BTC looks good for the bull side. And a few more alt charts here. This is stellar. I've been following this for, 6+ months, maybe 7 months, at least 6 months. This looked like it had a great Wyckoff setup. It looked like it was getting ready to break out, and then just hasn't, just gone sideways. So I'm still in that long trade, mainly because of this cloud. Again, just like ETH BTC, the 2-day cloud is finally flattened out and bullish for the first time in 2 years, 2 years plus at this point. The only caution here would be the TK disequilibrium C-clamp situation. So it wouldn't surprise me if we dropped to the cloud level, to the Kijun here, and then had some bullish continuation. We'd even fulfill this multi-shouldered head and shoulder, whatever you want to call it. But any breakout above 0.85 or whatever should be pretty decent for the upside. Looking at Link BTC, this looks unlike any other chart. I have no idea why. I'm not that bullish on Link long term, so I don't know what this is about, but it's doing exactly what you'd expect it to do when you think about a pitchfork or a trend channel. It's almost too perfect. I'm not saying it's painted, but it's great because you expect it to snake in and out of this median line. You expect this to be the sell zone. You expect this to be the buy zone. You may even expect the 200 to hold, and it's done all those things. So when I talk about pitchforks and projections, this is the perfect example. Just take a mental snapshot of what you envision to happen once you paint this channel. Looking at Tezos, does not look as chattish as Link does in that it's falling below the cloud, below the yearly pivot. The ultimate test is going to be this 200 EMA. It's really held above it since late last year. So that is the do or die spot, certainly, whatever that is, 25,000 sats, something like that. That's definitely the level to watch. But right now, it looks very unexciting for the long side. And then lastly, but not leastly, Doge BTC, still in this trade, still watching it sort of collapse slightly here. B-bands tell you be careful on the long side, as we are now below the 20 SMA and tight on the bands for the past 5-6 weeks. I don't know what this is. RSI is also less favorable than it had been previously. Still looking at a breakout above 30 sats, but right now it's looking quite sad. So this wouldn't surprise me if it continues to droop over the next 2 months, maybe the next 8 candles. I don't know. It just doesn't look bullish at all here. There's just no life, no bounce found. All right, that's all I have for this one. Like, dislike, comment, share, subscribe. Hit me up on Twitter, and happy trading.